Welcome to Paul Champlina's Talking Property channel. First-time buyers. If you're a first-time buyer trying to get on that ladder, the average deposit in London, it could be completely wrong here, is about 120 grand for a deposit in London. That is absolutely mental. I remember I bought my first property in 1992, 93. I was like 23 years old or whatever. I paid 40 grand for it. And I paid a 2 grand deposit.
Yeah, you bought a house for most people's deposit now.
I mean, it's mental. No, it was a one-bed flat in Edgware, and I was very lucky. But I think as we're older, we were lucky. But really, Gen Z, millennials, the average first-time buyer, I don't know what it is now. Is it 35,
32, 35, yeah.
And it is quite hard. Give me 3 or 4, 5 top tips for first-time buyers that are getting a deposit, whether it's bank of mum or dad or they've been saving, because obviously a lot of renters want to become first-time buyers. Give us some intel as a lender, as a broker.
Well, I think the first one is quite obvious. Be nice to mum and dad, because the bank of mum and dad is probably the largest UK lender, and has been for a few years now. First-time buyers it's a real challenge. We want lower interest rates, but you need to get higher interest rates to give you the ability to save for the deposit. So it's this chicken and egg scenario with them. There's obviously investment opportunities in ISAs to help you, but you need to be careful of those, because if you break them early, and what they can and what they can't do is penalties, etc. So it's difficult. There are lenders out there that will lend 95% loan to value as standard. That's good. There are lenders out there now that will lend more than 5 times your income to help you borrow more.
But they extend mortgages,
They might only go up to 85% if you're borrowing more than 5 times income. From a deposit point of view, yes, you can extend the term to make your payments cheaper, but lenders still want 5% deposit.
Fine. And how long are those mortgages for first-time buyers now you're seeing?
So I think realistically, when it used to be a 25-year traditional mortgage, I think most first-time buyers that are below the age of 30 are doing 30, 35-year mortgages.
Wow. Mental, isn't it?
It's difficult for them, but the reality is the first home that you buy at that age won't be your last home.
No, it won't.
So in 5 years' time or 10 years' time, then you can remortgage.
Isn't the average move 18 years or something? So I saw something like that.
Yeah, I think people move house less time than
they get divorced.
Used to. Yeah, there is that. Yeah. People used to get divorced more times than they move bank accounts. But, so it's your mortgage isn't your mortgage for life. Every couple of years it should be reviewed, or it's 2 or 5 year fixed rate deals. You can then look at the term again and think, right, your affordability's gone up, you're earning more now, these types of things.
And of course, I suppose you've got more of a chance if you've got a partner, because it's joint income.
Yeah, life changes quickly.
It does change quickly. I think also, we can talk this, and is that you still see, because obviously, a lot of tenants become homeowners. A lot of tenants want to become homeowners, and you get a lot of tenants that resent landlords and think they're greedy and all that stuff, which is the rhetoric that happens. But obviously landlords provide a service if it is a good service and a good product.
Absolutely.
But of course rents are going through, and there's a real affordability issue with tenants, without a doubt, and it's tough being a tenant. With regard to first-time buyers, are there some really good? Where would you recommend them? What type of deals are out there at the moment?
I think with first-time buyers, it's nice in one respect, because the deals that you'd recommend are usually with your really well-known, good high street lenders, your Halifaxes, your Nationwide, your big banks. They've been doing it long enough to understand the first-time market and the affordability issues at first time,
and the risk issue,
and the risk. So it's still challenging that the higher the loan to value, i.e. the smaller the deposit, the more expensive your mortgage interest rate is going to be, because the banks have to mitigate their risk, so they price it in. But there are some lenders doing some creative stuff. If you're in professions and you know that your income's guaranteed to go up at certain stages, they do low start mortgages. Right. They can lend them they might use bonuses, they might use overtime, they might use multiple income sources, multiple jobs. So all those types of things are now being they're more mainstream.
Yeah. Okay.
There was a new criteria come out this week, I think, where if you move jobs, they would take your bonus from your previous role, whether it's over the last 2 years, and you wouldn't necessarily expect to move to a job that didn't pay you the same. So they're getting a little bit more savvy and a bit more supportive.
So let me ask you this, Gavin, come to the end of our first-time buyers video. How should first-time buyers protect their credit rating, their footprint, to make sure they can get a mortgage and qualify?
Yeah, I think really one of the first things, and we've seen this happen a few times, is where as a first-time buyer, you're shopping around and you're going to see this broker or that bank, and you're doing sort of decisions in principle with multiple different agencies, and they're leaving either soft or hard credit footprints. Now, other lenders will see those, and they can have a detrimental impact on your overall credit score. So just be careful that you don't shop around too much or go too far on every kind of application.
Right.
You know, if I went to Barclays, they'd do a soft footprint on me. If I went to Nationwide, they might do one. If I went to a different lender or to a broker and he's gone more specialist, they might do a hard footprint and leave an imprint on my credit profile.
Right.
If you've got no credit history whatsoever, you've never had a personal loan, a credit card or car finance, if you've moved multiple addresses.
So what's the top tip, Gavin, to make sure that you enhance your credit score?
Stay within the limits.
Yes.
Don't miss payments.
Yeah.
You know, there are lenders that will deal with adverse. You know, everyone expects a blip every now and again, and COVID again taught us that.
Yeah, cool.
Miss car payments or miss personal loans or store finance. You know, be very mindful of things like payday loans. Lenders will look very negatively on people on those. So make sure your finances are in order, managed well. Don't be afraid that you've got some finance. You know, if it's a personal loan or a car finance, you know, that will affect your affordability on repayments. Make sure your savings that you've got, if they've been gifted, that, you know, people understand that gift is irrevocable. It is a pure gift, and they would expect it to look at it that way. But it's if you're staying. It sounds really patronising, but if you're sensible with your finances, you've got everything in a good position, you've saved meticulously, you've got your 5%.
And it is hard to save now.
It's
for younger
incredibly
people.
challenging.
It really is.
Which I said, you know, be nice to mum and dad.
Yes, I know. It is tough. You know, my son's 19, my girl's 15. And it is going to be bank and mum and dad. There's no two ways about it.
Yeah, but there's other options available. You know, you don't have to buy on your own. You can buy with. Doesn't have to be your partner. You can buy with your friends. You can make sure you set your properties up as, you know, tenants in common, so you own 50% each, and do the mortgages that way, so you can both get on the property ladder, and things like that. So there's different ways.
There is most different
to get
ways
on the property ladder.
So Gavin, where can people contact you?
So you can contact me direct on my email, which is gavinr@mfbrokers.co.uk. You can visit our website, www.mfbrokers.co.uk. It's probably the easiest two ways to get hold of it.
And you've got a really good mortgage calculator, haven't you, that you did some tech on that.
We've got some fantastic tools.
Which is really good on your website.
Fantastic tools on our website to work out how much you can borrow, residential and buy-to-let and bridging now on there. Stamp duty calculators, EPC calculators, everything on there.
Brilliant. Thank you so much.
Been a pleasure.
Absolute world of information. I hope you enjoyed this. Paul Champlin of Talking Property. Please remember to subscribe and give me your comments below. Subscribe now to Talking Property.